Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead that I am personally looking for. As we get started, I do want to just ask a favor. If you enjoy this video series, do me a big favor and just hit that thumbs up button on the video down below. I really appreciate it. So we're going to take a little bit of a tour around multiple different instruments. We'll talk about some indices, take a look at some commodities, crypto, currencies, etc. So I wanted to start here quickly with my bias on the S&P 500. Now, this coming week, on Friday, we have NFP, which is jobs data, and that is going to be very important for the state of this stock market, as well as, more importantly, why that matters so much to the market is because it matters to the Fed. The Fed's keeping an eye on the state of the labor market. And if we just go take a look, let's go browse some labor market data just to give us an idea. So if we take a look at NFP reports in recent history, what we can see here is that we've actually been mostly beating expectations in the last year or so. If we take a look at January of last year, we're beating, and by the way, the red dot that you're seeing on the edgefinder, we mark this as our forecasted values, and then the blue bar is what actually came out, and the yellow is revisions. So what you can see here is that we've actually been kind of beating most reports. We had that big miss due to the hurricane that was happening in Florida in October and November. But then you take a look over here, you can see again, some misses there, but we had a beat over here, miss over here, beat. Now, what I'm showing you here is basically how has labor data been coming in. Overall, not too bad. Considering interest rates have not really come down a whole bunch, it's not too bad out there. Now, you might also take a look at unemployment rate and say, look, this figure seems to be trending up, but just a reminder that the long-term average is 5.7%. So where we sit around 4.1 is not so bad. Also, ignore this figure. We are doing some maintenance this weekend, so that's just a weird sporadic number showing up on the edgefinder. We don't have January numbers yet, and we won't get those until February. So the labor market, I would say, is not in a critical position whatsoever, but we're going to keep an eye on that because we don't want to see it worsen tremendously. That could send the market into a little bit of a recession fear, but it also is one of those things we don't want the labor market to be too hot because then it keeps the Fed from cutting rates. So, and why does it keep the Fed from cutting rates? Well, if you keep seeing employment stronger and stronger, people get wage increases, and that causes potential inflation risk, which makes it harder for the Fed to reduce interest rates. The Fed actually wants to see inflation coming down in order to cut rates. Just because I mentioned inflation, here is the chart for that for US specific inflation. Of course, if you have the edgefinder, you can select other countries, but I'm just going to focus on US for a second. So again, big fall in inflation, and we've been, I would say overall, largely trending lower. Now, recently we've had a little bit of an uptick in inflation. We do want to keep an eye on that, but as long as this continues to move lower and the labor market stays relatively strong, that's going to keep me very bullish on stocks. So now if we focus on price action for a little bit, we can see that on Friday you had a very nice green little bump to the stock market, which really I think was needed in terms of price action. You had this wonky big, up and down candle, and then bulls kind of helped out on Friday. I would say that most likely, no certainties here, but most likely I do think that we are going to head back and see those 6100 area on the SPX get hit. So I think that there's some upside for stocks, especially with the new year, with Trump around the corner. I think that, the market's going to kind of be excited about less regulation and tax cuts potentially. Whether that happens or not is kind of irrelevant. It's more about what the market is excited for or scared of, and it's forward looking. So I think that, for now, we have a good upside move potential for the stock market. I am personally long specifically the NASDAQ, which came all the way back from the depths here on my position. We'll see if I can stay in the trade, but double bottomed right around this level of support here. In hindsight, I should have just entered right there. Would have made my trade a lot better, but I am long the NASDAQ. I went long over here, went in my favor, went against me, but has come back to just about break even. So I'm looking for more upside on the NASDAQ specifically. These companies really dominated, the big tech companies dominated in 2024. And I do still want to stick with that trade largely in 2025. Those companies are cash machines, and I'm talking specifically about Microsoft, Apple, Google, Nvidia, things like that. I generally see upside for those stocks, and so I do want to have a long position on the NASDAQ when the price action is giving me the right readings. And speaking of readings, we can take a look at the top setups page on the edgefinder. The edgefinder, of course, what it does is it pulls together a whole bunch of market data, and it actually automatically scores this stuff for you. It basically, think about what the edgefinder kind of, the intended purpose here is, which is basically, okay, it looks at seasonality data for oil, right? It says during the month of January, what typically happens for the price of oil. And although it's very, very slight, there is a expected positive move in the months of January and February for specifically based on oil over the last 10-year historical average. Now, of course, that's not a certainty, but that's a piece of information that I want automatically calculated into my bias for oil. So when we look at the top setups page, the idea here basically is it's looking at a bunch of economic data, looking at sentiment data, looking at technical data like seasonality, and generating a list of bullish and bearish readings for us on a whole bunch of different charts. So whether you trade currencies or you trade commodities or indices, this is kind of your one-stop shop, looking at all sorts of different data and mapping it out for you so that you're not just only looking at candlestick patterns to make full decisions. That's kind of the purpose, and that's the draw, and that's why we have so many people who use our tools. And just context behind the scenes, there's a 10-person team at A1 Trading, which is my company, which builds this stuff for traders. If you're interested in getting access to the Edgefinder, there's a link in the description down below, and there's a promo code. If you use the promo code, which is YTVIP, YouTube subscribers get an extra discount off of the tool at checkout. So you can punch that in at checkout and get a nice discount on the tool. And yeah, again, if you're interested in it, I've used it for years. It is the main source of information that I use to actually find and make decisions in the markets. And of course, I have my own trading strategy that I use, and this is not, oh, US oil is bullish, I'm just going to go out and buy it. That's not really how this tool is intended to work, but it gives me a general bullish outlook for oil in my own trading strategy after looking through this data. I really like that. So if I go over here and I, look at, by the way, you might notice that the NASDAQ, the Dow, these things are actually getting neutral readings for that right now. And while that is true today, a couple days back when I actually entered the NASDAQ position, this was giving me a nice bullish reading. The trend has broken down a little bit. We've slowed in momentum, and so we're getting some minus scores in that category. But if momentum picks up, I imagine this will probably pop back into the bullish territory. But again, I usually take trades that I like from this list as long as the technicals make sense and it aligns with my trading strategy if we get a bullish reading. So for example, we could go take a look at oil, and if we just go see this, and we say, okay, let's see what oil prices are doing here. We had a nice breakout to the upside. So even though the Edgefinder is bullish, I want to clarify how I may actually use the Edgefinder to find a setup. So for me, what I like to do is I say, okay, oil's getting a nice bullish read. And if I wanted to, I could actually go understand that a little bit better. So if I go data scanners and I go industrial commodities, which oil would be considered that, here we go. So now we have a full comprehensive breakdown of how this bullish reading is coming into the Edgefinder. So what you can see is that the commitment of traders data definitely shows some strength for oil, basically showing, if we look at the COT data, that's showing institutional money is very long oil right now. We also see a week-to-week change or added long positions, basically more bullishness in the price or in the traded contracts on oil from institutional money. So that's another bullish factor. Retail sentiment is not necessarily as bullish because what we can see is retail positioning is very parked on the long side. So I do like oil overall, but there's never going to be, or it's very rare to get an all blue reading, right? You're going to get some things that agree, some things that disagree. If we did a rapid fire look at the economic data, we can see GDP growth has been stronger than forecast. That's bullish for oil, right? Stronger economies, more demand for oil. What about manufacturing PMIs? Well, that came in real solid last week. So that's another positive signal for oil based on the economic data, right? PMIs, of course, are purchasing managers indexes, and what they show you is how the industry is feeling about future, economic activity in their respective areas, right? If you were a purchasing manager for, a big manufacturing plant, you have some inside scoop stuff, and this is a forward-looking indicator. That's a really important component to why I love fundamental analysis, is I think that it's more forward-looking than technicals. Anyways, if we continue, services PMIs, not as good because those kind of missed, but then retail sales, right? Retail sales, consumer doing well, that's good for oil, right? Stronger economies in general are good, and the consumer is core to the economy. CPI numbers, a little bit mixed here on that front, but we can see NFP came in better than expected previously. Even though unemployment ripped higher, that kind of nullifies that. But overall, we have a +8. So long story short, what I just did, you can of course do that for everything on the edgefinder. We have a full, data scanner page for each thing. But I just wanted to show you that as an example. So if we go back to oil prices, right? This is a setup that's very hot on my watch list right now. If we get a pullback, I may actually look to take some oil longs. I like this 73 area, and I also like the 71.50 level. These two areas both look good for possible long setups for my personal trading approach. Now, of course, whenever I mention a trade idea, guys, I've been doing this a long time. I get people who send me messages and they're like, Nick, you thought oil would do this, or you thought NASDAQ would do this. And I never claim to be a perfect trader, or I'm not always going to get it right. And I'm not here, by the way, to do your homework. If you're looking for somebody to do the work for you and tell you when to buy and sell, then trading is probably not for you, right? Trading is a very difficult thing. And if you don't fully understand why you're taking trades, when you're entering them, how much you're going to trade on each trade, if you're not fully committed to understanding the full process, it's probably better that you don't trade. But if you're interested in this stuff like I am, then, fully understanding, find your own setups, look at your own ideas, make sure it makes sense to you, and take the risk and take ownership of your trades, right? I am absolutely not always right. I have times where I'm dead wrong. And it's possible that this oil setup that I like here, I could take this trade and oil could just do this and I would lose money. And that wouldn't be the first time. Good traders don't have to be right every time. They just have to, again, manage their risk appropriately and make more than they lose. Slow and steady over time wins the race. So I do like the oil setup. So I'll go out on a whim and just say, I like this idea. I like this attempt here. And if that doesn't work, I'd probably try a second time down around 71.5 on US oil. So I already have some positions exposed to the oil movement, which, like, for example, is ExxonMobil. I have a long position on ExxonMobil. Nice little bounce here recently. I'm still in the red on this one. This has been a position in my portfolio that's been counter trend. Thought we'd hit some support and bounce sooner, but we have not. But, I'm holding ExxonMobil, and this one does pay a dividend. So I don't mind staying in the trade. You get 3.67% just for holding the trade long. So not bad. And by the way, that's an annualized return. I know it's not very much, but something to factor in is sometimes dividends can be a nice way to play it. I want to go back to the indices for a second and talk a little bit about the Russell. Another thing that I have a bullish position on right now, which is actually doing quite well. On Friday, I had a really good up day on Friday. I was up about 2% in my account, which was awesome. So a lot of that came from some wins in the Russell, and Bitcoin was also up a lot on the day, which I also have a bullish position on. But in 2025, I've mentioned in my outlook for 2025 that I do like the Russell quite a bit. I think the Russell has a lot of upside, and my target for the Russell was 2,700 by end of year of 2025. We'll see if that's right. Forecasts don't really mean a whole lot because they can change over time, but I do them for fun. And basically, I think that there's a good chance that the Russell does actually find a way to climb up and continue the rally that it tried to start in 2024. So this pullback, I actively have been buying. Now, what is the Russell? What are we talking about here? The Russell is small cap stocks. It's a smaller company list of smaller companies indexed in, just like the S&P 500 is the biggest companies, the Russell is a conglomerate of smaller companies. In fact, 2,000 smaller companies. And it's an area of the economy that has lagged the big, tech trade, because again, those big companies are very well capitalized. They don't need to borrow money. Well, Russell companies are smaller and are more sensitive to borrowing costs, aka Fed interest rates. So if the Fed cuts rates this year and the economy holds up, my base case for this is that I think Bitcoin and the Russell will have very good years. I do also think that if they cut rates specifically, that will really help gold, right? So if you get, the economy souring and rate cuts, gold will absolutely fly. If you get the economy going well and rate cuts, the Russell, I think, will fly. So I like both of those scenarios. I don't know exactly how the economy is going to shape up. Of course, nobody does, but I generally like both areas, Russell and gold long for this year. On the gold side, right? We'll talk gold for a minute. When it comes to gold, I'm still very much not in a rush. You can see you had this big pop on Thursday and then the reversal on Friday. I mean, there's just no follow through on this chart. And I know a lot of people who watch my videos, they love trading gold. They love watching this thing and the excitement around, people who trade gold futures or, gold CFDs on Forex brokerages. And people love the volatility that comes with those leveraged products. But man, sometimes you just got to know when to not touch it. And for the last few months, really gold has been such a boring thing to look at for me. And I don't say that, I know it's more exciting when gold is trending like this. Trust me, I absolutely love trading gold when it's moving like a freight train. Love it. My favorite thing to trade when it's trading like this, right? But right now, we can't force what's not there, right? We don't see follow through. We don't see breakouts. And you know what is so interesting to me is the edgefinder has been consistently neutral on gold. Look at this gold neutral reading. So let me just point this out. A lot of people ask, Nick, I'm considering the edgefinder, but why should I buy a software like this? Like, how is this going to help me? Well, it may help you in a way that you may not have realized. I'll tell you how it helped me in the recent few months. I have not been trading gold momentum setups. Why? This right here. This neutral reading, guys, has saved me probably upwards of 10 grand. Because if I was just trading purely off of technicals, there's a good chance that I would have been looking for breakouts. I would have been, we're getting something going here. And that would have faked me out. I have, nothing is certain, but the edgefinder's neutral reading has definitely, from my own trading strategy, kept me out of the way of this really ugly gold choppy market. Again, we have conflicting signals. You got seasonality look good. The trend is mildly uptrending, but then you have other things like GDP hotter than expected. US dollar looks real good because the US economy is showing some strength right now, right? So we have this mixed signal, and that mixed signal has kept me from taking losing trades. I've not been trading gold, and not trading it has been the best play for my own trading account. Now, again, you may do a different strategy than me. I'm not, telling you that, the edge finder is just the holy grail. I'm not trying to point that out, but sometimes just having a system that says no go, nothing to do here, it's like walk away and don't touch this thing because it's probably just going to lose you money trying to take trades on this. And thank God, because the last few months I've been trading indices and Bitcoin, and I've actually been doing really well. So I've had some really good trades trading the things that are actually showing some bullish and bearish readings on the edge finder and avoiding gold. Even though I love trading it, what are we actually looking for? What am I waiting for? Breakouts. Got to see them. I've got to see some higher lows and higher highs. I can't force something that's not there, right? We see resistance holding steady. We see support holding steady, right? Where does that leave me? That leaves me with, I don't see a strong setup that gives me a nice risk to reward, that I've got confirmation from my system. I don't have that right now. So I have to move on. And again, I know that's not the most exciting answer. I'm a content creator here, and I know my audience loves to talk about gold, but I can't force something. I'm here to make money just like everyone else in the markets. And so I can't force things that are not there. And I actually would encourage you, whether it's with the edge finder or your own system, whatever you are looking at, make sure you have something in place that does nullify bad trading environments like this. This has been a wonderful, wonderful, kind of improvement to my trading. Having a system that sometimes just says, you can't trade this. There's nothing there, right? There's no setups. And so that has been really powerful for me in my own trading. So I just want to encourage, you're going to hear people talk about, my course will teach you how to do this. And my software will do this. My signals will do this. There's all this stuff for sale to you. I get it in the trading space. But sometimes the best thing to learn is to know when to not touch the thing you're looking at, right? Sometimes it's just better to walk away, do something else, find a different thing to trade, find something else to set up on. So anyways, that's, again, a boring pitch for the edge finder. I get it, but it is genuinely a really important thing that it's done for me. Sometimes it just keeps me out of trades I shouldn't be in. I want to talk to you guys about some currencies here for a second. So if I actually just go all the current readings that we have on the edge finder, you'll notice something. Dollar Swiss, dollar CAD, bullish. Euro dollar, pound dollar, Kiwi dollar, Aussie dollar. You get where I'm going with this. The dollar is continuing to be a good signal on the edge finder. So when I go look at the dollar index, right? Dollar index looks great. Very uptrending, powerful uptrend. Dollar bulls are dominating. So I love this chart. I want to be a participant, and the edge finder has been spot on with the dollar for the last few months. This has been a wonderful play to the upside. If you've been catching this, then congratulations. You're probably having a really good couple months. If you're fighting this, again, I would urge you to ask, why am I fighting this really strong uptrend? And can I give you a bit of a warning? Check this out. If I go look at retail sentiment and I sort for major currency pairs, if you're somebody out there, and I'm not trying to pick on you or make you feel, I'm just going to ask you to ask yourself a question. If you're if you're short Kiwi dollar, if you're short, I'm messing this up. If you're long the Australian and Kiwi dollar, if you're long the euro dollar, if you are short dollar CAD, think about this. What I'm showing you on your screen right now, this is retail sentiment. This is an indicator that is very popular for our users. Retail sentiment shows you where, generally speaking, retail seems to be parked the heaviest. Retail is oftentimes on the wrong side of great trends and setups. So what we see is that if you're somebody who is long these things, I just want you to, it doesn't mean that these things can't go up, right? Because they could, or this dollar CAD couldn't go down. Like, it could turn around. But if you're planned for the reversal, this has been a wonderful signal to fight, retail traders are trying to fight the trend to just fade retail. It's been a remarkable period in the markets to go against retail. So if you're somebody who is shorting the dollar actively, we've got higher highs, higher lows, economic data that is real solid for the US dollar. Again, I'm not saying that it can't reverse, but you've got to make sure you really know what you're doing and why you're doing it, because we've been riding against that move. And I'm not trying to say, I told you so, but we've been saying this for a long time. Retail traders constantly fight great solid uptrends like what we see in the dollar. My warning would be, when you see everybody in the retail side trying to short something, be careful. A lot of times the trend just continues and takes more and more money from them. If you're somebody who's been shorting the dollar, you're just getting stopped out and just getting beat up, and you're adding positions in this and it's just getting worse and worse. Again, Kenzo, who comes on our live streams, him and I were discussing this topic once, and he made a great point. He said the first thing we're supposed to learn as retail traders is the trend is your friend. And retail traders can't seem to do that. They fight trends like there's no tomorrow. Everybody wants to play the reversal. And I get it. You want to be cute. You want to be the hero. You want to fight. But to me, I found so much more profitability in just riding good trends with good risk management rather than doing whatever the heck this is, just fighting up trends. This indicator, the retail sentiment indicator, again, this might be a tool that you want to get access to with the edge finder. I know I got all sorts of plugs for the edge finder. You might say, this guy's just trying to sell me the edge finder. Guess what? I'm not going to lie to you. Yes, I am. It's a tool you should get. It's really worth the money. And, I'll never hide that I have something for sale on my channel, but, I find it really important to have the right tools. And I do think that a lot of traders out there are just trading blind. They're just looking at charts. They think they have enough in front of them. And in my opinion, and from my experience of working with a lot of traders who have gone from, losing to profitable, having the right tools can make a huge difference. So I'm actually, as I just discussed that, I'm actually looking to continue to fade retail. So euro dollar, we mentioned retail traders are really long euro. So if euro dollar actually bounces, I'm looking for more short play opportunities. I'd actually look to potentially dollar cost average into euro dollar on the short side. So I like that setup. If we get it right, if you start to see this move higher, maybe that 618 retracement looks really interesting for me on the euro. Same thing with the pound, by the way. Pound also looks pretty bearish to me. Really nice setup right around that 1.25 level. I like that. It's not certain to work out. And of course, at some point, the trend will reverse, but I like the setup on the short side for now. Not going to try and call a bottom. Again, that's what the retail traders are out there on average doing. And I should clarify, I am a retail trader. So I'm not saying like all those silly retail traders, right? They're beneath me or anything like that. I'm a retail trader too. It's just that if you know that the crowd is doing something, you just have to be careful. Sometimes the crowd is right, but a lot of times they're wrong. So anyways, Kiwi dollar and Australian dollar, I've mentioned in recent videos that I don't love these charts. There's not as clear of some like pullback setups for me. So I'd mostly be looking at like euro dollar shorts, pound dollar shorts. Dollar yen also is another popular currency pair. This chart looks real solid to the upside. And I don't think we're getting a current reading on dollar yen. Let me check. Yeah, no dollar yen reading here on this list. But yen pairs in general getting bearish readings, which I thought was interesting. And look at this, Kiwi yen getting a -13. That is a very, very strong bearish setup that we've been seeing on Kiwi yen, which I think is really interesting. So, I don't love the chart here. In fact, if I was to trade Kiwi yen, what I'd be looking for would actually be breaks of these lows, like real momentum picking up to the downside, breaks and retests, that sort of thing. But where we currently sit, not loving this setup very much. Don't love the technical chart. And that's just a good example of like the edgefinder may say something, but it doesn't mean I just take the trade outright, right? I've still got to see a good setup, but we've got lots of currency setups on the edgefinder right now. So I find that very interesting, and there's a lot of stuff on my watch list. Also take a look at dollar Swiss. I'm very interested in getting long dollar Swiss. I made some good money on the long side on this one recently, and I'm looking to play it again. If we get some bigger pullbacks, I'm going to look to dollar cost average into this one and willing to build a position if necessary. So that's just something that is definitely on my watch list going into this week, is if you get some larger scale pullbacks in the dollar, I'll be looking out for that. Also, I did want to leave you with a quick, a plug here at the end. If you're looking for a better brokerage, there's several linked in the description down below. All of them can be traded directly on tradingview.com, which is super convenient, but also several of them offer welcome deposit bonuses. So you can actually get, credits towards your trading account if you sign up with the links in the description down below specifically. I have special signups available with my sponsors that are listed in the description down below. Thank you very much for watching. I hope you have a great trading week ahead. Trade safe, trade small, and we'll see you next time.